Many investors fall into the trap of tribalism with their investments. They either fall in love with the company and allow their emotions and expectations to override fundamentals and reason, or they go along with the hype and peer pressure that is so prevalent in today's markets. Today I'll discuss why this happens and how you can avoid it, so stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success and investing, as well as going against crowd thinking mentality. I weave this into basically all of the videos I make, just going against crowd thinking and what the crowd is going after. Basically, if the crowd is running after something, you should run away from it like the plague. That's usually the takeaway message. But if you like these kinds of topics, just consider subscribing. I also want to make a disclaimer that none of this is investment advice, and I can't give advice, so don't take this as advice. Now, the main reason for me making this video is because of another video I made about Tesla a couple of weeks ago. At the time, nothing seemed controversial about it. I was merely discussing whether or not I thought Tesla would be valued at $2.3 trillion in the next 5 years. And if you don't know right now, this would put it at $15,000 a share. And right now it is at $2,000 a share, and it's been going up basically parabolically for the last several months. I examined the case that Cathie Wood was making and ultimately came to the conclusion that this was not likely. Now, since then, this has become my most watched video, but also my most controversial and disliked one. As I just explained, I call myself the Contrarian because I tend to disagree with what the investing mob is saying. And from this video, I could see that I hit on something significant. Not only did people merely dislike it, they called me names, and generally didn't present any reasonable arguments as to why they were correct and I was delusional. Also, the real question here is, if I'm wrong about Tesla and not buying into it, what harm is it to them? And I would also add in that I used to be optimistic about Tesla as an investment. I just think it is way overvalued right now. But I wouldn't call myself a Tesla bear. I don't think it is going to zero as some short sellers would claim. I don't think it's going bankrupt. If it did, it would definitely be bought by somebody else. But this brought up the question, why do people feel so passionate about certain companies in particular that they almost turn into a cult? Possibly the last time it became this strong with a company prior to Tesla was back with Enron. But some other strong past or current examples could be with DeLorean, Trader Joe's, Lululemon, the Mazda Miata. The companies mentioned here have a strong advantage of building a cult-like following behind them. Also, a major factor is that humans are emotional creatures. We want to fit in. We tend to subconsciously get into us versus them mentality. And this is very prevalent in other areas of life, such as politics, sports, family. We can basically turn anything in this day and age into a divisive issue. So it actually should come as no surprise that investments fall into this as well. The trouble with this is there is no function for feelings in our investments. We are either right or wrong in our convictions and feelings. It makes no difference whether we feel that Tesla should be the most valuable company in the world. It only matters in the long term if they can actually grow to this level, have this level of earnings, revenue, etc. So the fundamentals of a company are the truth. You need to look at the truth for what it is. If you had actually been looking at the truth behind Enron, you hopefully would have sold out when they began fraudulently manipulating their earnings and balance sheet, and instead they turned to hype and noise to continue pumping optimism behind their company. Now, I'm definitely not saying that Tesla is the next Enron, and I really hope that it succeeds in the long term, but as an investor, you need to be an independent thinker. Do not fall into calling yourself a die-hard bull or a die-hard bear. You need to listen to both arguments and use your reasoning to come to your own conclusions. So whenever you're considering a particular company, industry, commodity, cryptocurrency, whatever it might be, don't fall into crowd thinking. Don't go with the herd. This is why the average return on investment is 2% per year, which is actually a negative real return. If you include inflation, which is anywhere from 3 to 8% per year, this is a negative real return. People don't think for themselves, and they let their emotions get in the way. So let me know what you guys think about this. Do you consider yourself an independent thinker when it comes to investing? Have you had to learn this lesson the hard way like me? Anyway, let me know what you think about this, and I hope to see you again.